Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into what's driving mortgage rates on a daily basis, whether it might come from the economic calendar, headline news, geopolitical. Sometimes sentiments in the markets change, whereas good news is now bad news, and vice versa. And we try to get into providing explanations for those who are following the mortgage rates, whether it may be somebody who's in the business or somebody who's in uh, consumer looking to buy or refinance their home and want to kind of gauge where the mortgage rates are going. And hopefully this will give them the information that they're looking for to help them make an informed decision whether to lock in or maybe to float. A little bit about myself is my name is Mike. I do work with a national lender. We do loans in all 50 states. We do from loans from refinances and purchases. So if you guys are looking for assistance in those areas, please feel free to reach out to us. We'd love to be able to assist you. However, but we can also be used as a resource. We're here to answer any questions you might have, whether it might be something about mortgage rates or something about uh, mortgage loans are available out there. We're here to help you guys out. So again, please feel free to reach out. We'd love to be able to talk to you. We enjoy this and love to be able to engage. Without further ado, why don't we jump right into it? We'll start with the economic calendar. We do got a bit of data to go over today. The big one will be coming up Friday, which is the PCE. That's the inflation data that the Fed's favorite gauge for inflation. So that'll be the big one for this week. However, as you can see here, we do got quite a few here. We'll start off with the Case-Shiller home prices, uh, month over month for the month of December. So in November, prices jumped up month over month 1.2%. Forecast is kind of for 1.1%, and it came in a little bit hotter in December here. So the year over year, according to Case-Shiller, these are the prices in the 20 largest markets in the U.S. Went from 18.3% in November. Forecast calling for a dip to 18, and it actually went upwards to 18.6. So according to the 20 largest markets, we saw a slight uptick in terms of home prices. Now we got the FHFA home prices. This measures the conforming loans out there, and this is brought to you by FHFA, who handles conforming loan limits and handles Freddie and Fannie here. Now, their month over. We'll look at the month over month first. Their November was actually revised from 1.1% to 1.2%, and it pretty much came in at the same pace at 1.2% in December. Its forecast got revised as well. It's November year over year got revised from 17.5 to 17.6, and that remained unchanged in the month of December. So FHFA had a little bit different note of Case-Shiller, but that doesn't mean home prices are any different. Again, these are just conforming loan limits in the 20 largest market. Well, Case-Shiller is in 20 largest markets, so we could have jumbo loans, we could have FHA, VA, different loans like that FHFA won't be releasing out there. We got the market manufacturing. This is by IHS market manufacturing PMI for the month of February. So anything above 50 is considered expansion, and then of course below is contraction. So we had a 55.5 for the month of January, which was kind of slowed down a little bit due to, of course, COVID and everything else that was going on over there. So in some cases, even weather, but mostly the Omicron. Forecast is supposed to tick up slightly to 56, and it jumped up a little bit further to 57.5. Then we also got the services industry, which was the one that got hit probably the hardest of those. Uh, Went from 51.2, forecast got 53, and it went up a little bit further to 56.7. And then last but not least, we got consumer confidence. January got revised slightly lower from 113.8 down to 111.1. Forecast was coming for 110, and it came down to 110.5. So it did lower in the month of February. So a little bit mixed results. Home prices still continue, for the most part, rising. We do see some improvement in February for both manufacturing and services that we probably for the most part, expected that coming out of the January that got hit again from Omicron. Now let's take a look here at the mortgage-backed securities, which is what our mortgage rates are based off of. If you didn't know that, right now we're both, as you can see here, we're down 17 basis points. Both stocks and bonds are reacting to the news yesterday when Russia decided to go ahead and advance its troops into the pro-Russian opposition forces in Ukraine. So they're not all the way invading into Ukraine, but have entered the area where there's Russian pro-Russian uh, forces that have been trying to, I think, break away from Ukraine, and so they kind of moved in there. And there's of course, we're getting a lot of retaliations from diplomatic retaliations from like the EU and U.S. putting sanctions out on this. EU also cut the gas pipelines coming in to Europe, or Germany did. We got a bunch of stuff kind of going on, and of course, there's concerns that they could further escalate the invasion. So we'll wait and see what happens. But as you can see here, we were lot the fluctuations here were way down here, jumped up, came back down, even touched way down here at one point. See a long wick there, and it tests its way up here. So, so right now we are down 17 basis points for the day, and that translates to pricing for mortgage rates to be a little bit worse right now as a result here. Let's go ahead and take a look. And then 10-year treasuries, we are at just under 1.93, so we're still below the 2% mark, which is good for us because it puts less pressure on mortgage-backed securities. So we're still, again, down by about the 1.93 range here as a result. So last but not least, we'll touch on the conforming loan limits, or that average rate for those conforming loan limits. We'll start with the 30-year fixed, which is at 4.08 now. If you haven't heard, we did hit the 4% mark, and 15-year is now at 3.33% now. So again, if you're not aware, we for about a week now we've already been, according to the averages here, we've hit the 4% mark, and these do include points in there, so you're buying points to be able to get to that rate right now as well. So anyways, hopefully that gave you the information you're looking for. If you guys got questions or anything, again, please reach out. If you like these videos, please help us out and smash that like button and share us. We greatly appreciate that. You guys have a great rest of your day. Thanks so much for watching, and we'll see you guys in tomorrow's video. Bye-bye.